I'm Fred Martino. Thanks for joining us for our continuing series of economic forums, and special thanks to our partners at the Greater Las Cruces Chamber of Commerce. We're very grateful to our panelist, economist from New Mexico State University, Dr. Jim Peach, will have a look at the national picture for us, a focus on New Mexico and the region from Dr. Chris Erickson, and Dr. Ken Martin brings us up to date on the financial markets. And as always, we begin with you, Dr. Peach.
Thank you, and I'd like to thank the Chamber and KRWG as always. This is always good fun. You know, 2014 was a good year for the economy despite a rough start. In the first quarter of last year, we had a decrease in real GDP of 2.1%, but in the second quarter, we increased by 4.6%, 5% in the third quarter. We don't have fourth quarter data yet, but it looks pretty strong, especially if you look at what's been happening in the labor market. In December, we added 252,000 jobs. 246,000 was the monthly average for the year, but 288,000 in the fourth quarter was the average. So the fourth quarter looks pretty strong, and all of the indications are that the first quarter of 2015 will be pretty strong as well. The employment situation is really, really good. When you think that 2 years ago we had an 8% unemployment rate and now it's down to 5.6%, we've added 10.7 million jobs since the low point in February of 2010, and we added 2.9 million jobs last year, which was the most in 15 years, the most since 1999. Almost all of those were private sector jobs, 2.8 million. The public sector is still not growing even as fast as population grows. We add about 3.5 million people a year. Last year we only added about 100,000 public sector employees, and that's not enough to keep up the pace. We need more teachers, we need more firefighters, we need more policemen. That's the bulk of public sector employment, so that's still kind of a drag on the economy. But there's some other things that are pretty good news. We sold 16.5 million new cars and light trucks last year. That's the most since 2006, and it looks like it'll be 17 or 17.5 million this year. So automobiles are, that's a sector that's really doing well. December was an astounding month. Sold 1.5 million, an increase of 15% over the previous month. Housing, however, is just kind of mediocre. We added about 1 million new starts last year. Less than half of those were single-family starts. Prices have gone up a little bit, and even with extraordinarily low interest rates, the housing market has just not come back like it should have from the Great Recession. Part of that is that we've had very low rates of family formation, household formation, since 2009. That may change a little bit as we pick up on employment and income. That's all. It looks good for 2015, but who knows? We've got some other things to talk about, though. That oil prices, as everyone knows, have declined by more than 50% in the last 7 months. Roughly $45 for West Texas Intermediate right now, and I've heard a lot of people on the talk shows on TV describe this as the equivalent of a tax cut, and that this will boost consumer spending. But there's a basic difference between a lower retail gasoline price and a tax cut. A lower retail gasoline price does not increase your disposable income. It leaves you with the same disposable income that you had before. You're spending less on gasoline. You may spend a little bit more on other things, but there's no evidence that a lower gasoline price is going to boost consumption, as I saw 2 or 3, I won't name names, experts even this morning talking about. That just doesn't happen. It's not going to have a boost in consumption as a result of lower gas prices. Change the composition of it. Some industries will benefit, transportation, especially airlines, but we'll have a decrease in capital expenditures, a lot of which has been driven by investment in the oil and gas industry. There have been any number of studies over the years that show that a sharp increase in oil prices has a negative effect on the economy. But it is an asymmetric relationship. A sharp drop in oil prices does not have a dramatically positive effect on the economy. So don't expect much from that. It is not just oil prices that are down. Natural gas prices are down below $3 this week. That's not even worth drilling for at this point. Copper is below $3. If it gets $2.65, $2.70, if it gets around $2, we're going to see some copper shutdowns. So low commodity prices, while we might benefit as consumers a little bit, are not necessarily a great thing for the economy. We've got a couple of other things that are possible headwinds for this year. Europe is not doing well in many, many respects, and that's not a good thing for the U.S. economy. The other thing is we've got the wild card of the Federal Reserve System, and we've got 3 new voting members on the Federal Open Market Committee this year, and no telling what's going to happen there. Everyone is anticipating an increase in interest rates, but if commodity prices stay low and inflation is not a problem, and there really is no inflation in the economy, 1.6 on the GDP deflator, 1.3 on consumer prices, and 1.4 on the producer price index, there's not much of an incentive for the Fed to raise rates. I think we're going to have a good year this year, and I'll quit with that.
Okay, and now we get a closer look at the region and the state of New Mexico. Dr. Erickson.
Yeah, well, last time I was here, I discussed the fact that New Mexico had been bumping along near the bottom in terms of job growth for several years. And in fact, I think when I showed up here last time, we were 49th out of the 50 states in terms of job growth. That's turned around. We seem to have turned a corner in the state economy. And while we're still not doing gangbusters, we're still lagging behind the national economy, that we're not at the bottom like we were before. In fact, in this most recent data that was released a couple weeks ago, among the 50 states, we were ranked about 30th in terms of economic growth, in terms of employment growth among the 50 states. And that's good news. Now, we're still lagging the national economy, and that can be mainly explained by the fact that we have an asymmetric impact from federal spending in our state. We're a state that's heavily dependent on federal spending. The cutbacks in federal spending that is the sequester continue to impact our state, and will continue until the sequester plays itself out in totality. And I always make the joke that if I predict something and I'm right, I'll remind you. So I will remind you that a couple of years ago I said that the sequester would knock about 1.5% off the growth of New Mexico, and that's just about how much we're lagging the national economy in terms of economic growth. And so it appears that that forecast that I made is about right. I'll also note that if I make a mistake, I won't bring those up in future shows. Of course, the big news, and Jim alluded to this already for New Mexico, is oil and gas prices. We're an oil and gas exporting state. We're heavily dependent on oil and gas at the state level for tax revenues. And when the oil and gas falters, that's bad news for our state. The rule of thumb that you often hear is that for every $1 decline in the price of oil, we see a $7.5 million decline in state revenues. And in this summer, the forecast for the budget was based on oil and gas prices of around $100. I think it was maybe $95, I think about it now. And then more recently, the forecast has been based on $66. Well, if we are not at $66, if we're at, Jim was mentioning that prices are bumping around $45, but even at $50, we have no new money at the state level. That means there's no money for expansion of programs, there's no money for pay increases for state employees, and that's not good news. That's not good news for Las Cruces in particular, because our largest employer, of course, is the university, which is heavily dependent on the state for funding. And right now, if the price of oil continues at around $50 a barrel, that'll mean no new money, and if it declines below $50 a barrel, it'll mean that we'll be running a deficit. Now, I don't think that's a big deal in the very short run, because we have a fairly large surplus at the state level. But if that were to continue for a period of time, it could lead to some real problems. I also did a little looking, a little historical perspective. I looked at how the state had been doing since the start of the Great Recession, which of course started. We hit the previous peak in December of 2007. And if you look back over that period of time, we currently are on the recovery. We are doing fairly well. We've recovered about as well as and I'm hesitating here a little bit because I had the numbers written down. I don't have them. I made a mistake. Can we edit this? No, we can't. But anyhow, I didn't bring the numbers I had written down, but we were doing fairly well in our recovery. We're about 30th in the country in terms of economic growth since the beginning of the Great Recession. Now, the pattern of that growth is a little bit different than the national economy, which is that in the national economy, we saw a fairly sharp drop-off immediately at the beginning of the recession. And in New Mexico, that drop-off was more modest. Then we've seen a somewhat more recovery, especially over the last couple of years. And in New Mexico, we've actually been lagging the national economy. So while we're doing about 30th nationally, and we're about even, we're doing well in that regard, we're still lagging behind in terms of overall growth. Now, as you know, the state legislature this year is going to be dominated by the Republicans. We have a Republican governor. We have a Republican majority in the legislature for the first time. And we also have a Senate that's dominated by a conservative coalition that includes Democrats and Republicans. And this is likely to be a legislature that is particularly favorable. It's the first time since the 1950s the Republicans have had this kind of control in the state. And it's likely to be a legislature that's particularly favorable for business interests. And so the question is then exactly what would you use those, what are the kind of things that the legislature can do? We've had a long period of unified Democratic control, and I don't care whether you're Democrat or Republican, when you have a change in power, that's an opportunity for making some changes. Among the things that you could look for the legislature to be doing is they're going to, I think there's already been an announcement, they're going to emphasize trying to make us this a right to work state, which allows workers to be employed regardless of whether or not they belong to a union, that an existing union in a particular business. And then also, but some other things that we could think about the legislature doing, the Republican-dominated legislature and the governor would be working on reform of education, K-12 education. And then also, we have a very large government sector in terms of employment. New Mexico ranks 5th in terms of the total number of state and local employees nationally. Now, there's some reasons why we rank high. We have a younger population, so we need more school teachers. We have a fairly low density state, which means that we have that we need more employees located in different counties, and you might have in another state that's a little less densely populated. And when you take that in total, that's the reason why we have some extra state employees and local employees. But perhaps the legislature, perhaps the Republican Democrat dominated legislature should be focusing on whether there's some way we can shrink the state and local employment in the state, and perhaps modernize our state, depend more on technology and less on just labor. Thanks.
All right, thank you very much, Dr. Erickson. Dr. Martin, just like last time, you get to end with positive news, I think. The markets are on fire, right?
Oh man, what a great year to be a stock market investor, 2014. Of course, 2013 was a greater year. The Standard & Poor's 500 in 2014 returned about 13.5%, including dividends. That was on top of 2013's performance of about 32%. So two back-to-back years that are pretty good, way above average. The average return over 100 years, average annual return is about 9%. So the question on everyone's mind is, what's 2015 going to look like? And after those two back-to-back pretty good years, and actually since 2009, or since the nadir of the market in March of 2009, we've had, I think the average is 15% per year. And the question is, are the kind of speculative excesses getting the best of us? Are we in a bubble? Having lived through a couple of market bubbles, and all of us here can fondly remember the dot-com bubble and the housing bubble, we know that those things eventually do end. So the question is the market extremely overvalued? Well, let me answer that question first, and then we'll look at what we think 2015 will look like. Probably the most common way of assessing whether the market is in a bubble is by looking at a valuation ratio, such as a price-earnings ratio. Robert Shiller, Nobel Prize-winning economist at Yale University, has developed what he calls the CAPE ratio, C-A-P-E. That stands for the cyclically adjusted price-earnings ratio. And what's cyclically adjusted is the earnings. He uses a 10-year average of earnings in the denominator of the price to earnings ratio, and price is the Standard & Poor's 500 index. So based on that CAPE, where do we stand? Shiller has his data that he used in his book, Irrational Exuberance. He has it posted on his website. It's freely available. I use it in class and have my students use it. It's about 100 years. It starts in 1871. So it's over a 100-year time series. And the 100-year average is about 16 on that CAPE ratio. Where are we right now? Right now we're at 26. A full 10 points above that long-run average. Now, does that mark extreme overvaluation? Well, smarter folks than I, when they look at this question, use the metric of 2 standard deviations above that average as the benchmark for extreme overvaluation. 2 standard deviations above 16, and there's a lot of variability year to year and month to month in that CAPE ratio, because prices move a lot more than are justified by the fundamentals, as Professor Shiller also shows in his book. But the 2 standard deviation benchmark is really about 30. So we're not quite at a level that we would call extreme overvaluation or bubble levels. And even if we were to get to that bubble level, you have to be a little bit careful, because the last time we got there, 1995, we had a full 5 years to run and a doubling in the stock market before that bubble burst. So it's easy to call something a bubble, but predicting the timing of when that bubble will pop, very, very difficult. So by my reading, the market is, I mean, you could argue it's overvalued, but I don't think we're in a bubble situation, at least with respect to the Standard & Poor's 500. There may be other asset markets where there are bubble conditions or have been bubble conditions, but in the overall stock market, I'm not seeing it right yet. So what's the market going to do in 2015? Inquiring minds want to know. Well, the experts, the chief financial strategists on Wall Street, are surveyed by Barron's every so often, about every 3 to 6 months. And so Barron's came out with their end of year forecasts right at the end of December. And the Wall Street strategists' average target price on the S&P 500 is about 2,200. Right now we are at about 2,000 and change, kind of depending what happens today in the market, but about 2,000. So roughly a 9 to 10% increase in the market is what the Wall Street strategists are looking at. Well, that's about average. I mean, if you were to, without almost any knowledge, if you just had an understanding of the average rate of return in the stock market over the last 100 years, you would say, close your eyes and pull out a number, it'd be 9%. They're looking at about an average year. Well, those of you who have been faithful followers of our economic forums know that, like Chris, I like to make forecasts and occasionally bring up how my forecasts have panned out. Last time we met, I had an announced forecast of 18,700 on the Dow. And that is based on, I think unlike the Wall Street strategists, I like to put into action the valuation models that I teach my students in my classes. These are discounted cash flow fundamental valuation models. And with the Dow, there are only 30 stocks in there, so it's a lot less cumbersome than trying to do this on 500 stocks in the S&P 500. So last September, my target was 18,700. I've since redone that analysis on the 30 Dow stocks right at the end of the year, beginning of this year, and my revised target is now 18,400. Come down a little. That's probably, if you think about it, reflects kind of decreased earnings prospects for a couple of big Dow stocks like ExxonMobil and Chevron, maybe some others. And like Chris, I kind of like to talk about where my forecasts ended up. So my forecast, and that September forecast was really a 1-year forecast, okay? So we're not quite there yet. It could still work out. But right around Christmas, the Dow reached 18,000 and change, just
pretty
over.
Close.
So I'm feeling pretty good about that. So 18,400 is my new target. And one more question. Speaking of ExxonMobil and Chevron, if you watch CNBC or read the financial press, you'll hear questions about should I buy oil stocks, and because some of them have just been crushed. The select sector exchange traded fund in energy stocks, it's the energy stocks in the S&P 500, are down 25% since last summer. I mean, they have just been slaughtered. I personally would be a little bit cautious. We always like to buy low and hopefully sell high. But buying low, make sure if you're looking at oil stocks that they are well capitalized. So probably sticking with the integrated majors, the Exxon Mobils and Chevrons of the world, that are going to be able to withstand this downturn in the oil patch. Those are probably the ones I would look at.
All right, very interesting. Thank you again for that. And now we move to our audience portion of the program. For the rest of the hour, we'll take questions from our studio audience. We'll ask our audience members, when you come to the mic, to say your first name and the city where you live, and also you can ask a question to one of our economists or simply pose a question. And very often there will be a number of perspectives, a number of parts to the question, and folks will cover a number of different things. And we are going to have an audience question in just a moment here for our economist from New Mexico State University. I want to once again thank our partners from the Greater Las Cruces Chamber of Commerce. And now our first question.
Hi, I'm Cruz from Las Cruces. Professor Peach, although this is an open question, you provided a fairly positive picture of the employment situation and noted that the unemployment rate has gone down recently. To what extent, if at all, if you were to drill down into those figures, does that reflect, how would you make the distinction between underemployment versus full employment? And then as it relates to that, if I may, to what extent, how much of a sector of the population nationally has actually ceased to look for work, and are they accounted for in the unemployment figures? Thank you.
Okay, great questions. Dr. Peach.
The unemployment rate that I gave you is the standard unemployment rate. It's called U3. It does not include discouraged workers, those who are who would like a job but have not looked for work during the last month for economic reasons, that they think the market is too bad. That number has been shrinking for the last 2 years. It is, you mentioned underemployment. That can mean a lot of different things. In a lot of the discussions recently, underemployment is referred to part-time employment. Part-time employment is just about on its unemployment is about on its, part-time employment is about on its 20-year average. And the number of people who say that they are working part-time because they cannot get a full-time job has been shrinking for 2 years. I think we're in pretty good shape. If you want to look for terrible things in the job market, look at teenage unemployment, which is over 20%, or black teenage employment, which is nearly 1/3 of the people ages 16 to 19 who are black.
He asked a question I was curious about too, which is this idea of full employment in our economy. And I've seen quotes from economists saying we're not at full employment at this 5.5% or so. Others say we may be fairly close. What do you think?
Many economists define full employment to be something that they call the so-called natural rate of unemployment.
Yeah.
An unemployment rate that they think doesn't encourage inflation. Okay, and there's nothing natural about unemployment. Zero is full employment.
That's your view on that.
Yes.
Do we have differing views?
Yes,
Because
Chris Erickson
there are a lot of
likes
folks that
unemployment.
disagree with that.
Oh, well, thank you. Yeah, I don't like unemployment, but I do think that there's some unemployment is an inherent part of a dynamic market economy where you have people who are looking for work, you have employers who need work. When you have economies that are growing and expanding, and you have other sectors of the economy that are contracting, you need to have this turnover. Where the problem comes in is when you start having long-term unemployment, where people are not trained for the jobs that are available, or don't live in the location where the jobs are available, and therefore they have a great deal of difficulty finding jobs. And there's no question that losing a job and being unemployed is absolutely the most negative impact on the economic life of an individual that they're likely to experience in their lifetime. And that kind of, and avoiding that kind of unemployment is extraordinarily important. And so high unemployment is bad, but at the same time you want a little bit of unemployment so you can have workers available for the jobs that become available, and so the economy does have a little bit of working. And if you do have too low unemployment, the result will be wage inflation, and then that will result in overall inflation. But right now there is no evidence of wage inflation. There's no evidence that we're at that point where salaries are beginning to rise, causing inflation. And so I would say we're not at full employment at this point, and maybe there's another % or even more that we can wring out of this economy before we start seeing inflationary pressures from the labor market.
Yeah, we should get to that coming up, that in fact, even though we have this robust employment growth, the average wages were actually down slightly in December. This concerned a lot of folks. We have another question now.
Hello, my name is Ron from Las Cruces. While driving here to this event today, I was hearing on the news that Congress is passing legislation to redefine full-time employment. Right now it's 30 hours is considered full-time, and they want to raise it back up to 40. I'd like to hear your views on that, all of your, how will that impact our economy? And again, OPEC today, the Prime Minister said that they will continue to lower prices for the coming year, which is this year, to almost $45. And I know our legislature is looking at that, so I'd like to hear your comments on that. Thank you.
And of course, he's referring to this definition of full-time under the Affordable Care Act, that 30 hours was the definition for employer subsidies for health care under the Affordable Care Act. Some in Congress say it should be 40 hours, that we define full-time work as 40 hours to get that subsidy. This is very interesting. There's a lot of differing opinions on this. Dr. Peach, why don't we begin with you? And I'd like to hear briefly each of you to address your opinion on this. And if you don't have an opinion, the opinion that you think is prevailing on this in business, and what we should think of this, if this would even have much of an effect.
Oh, I think there's no shortage of opinions at this table. But this is the first of a series of things that Congress will attempt to do to weaken the Affordable Care Act. I don't think it's going anywhere. The president will veto it, and so it's not a significant issue. That's just not going to happen. In response, Ron, to your other question about the price of oil, the price of oil is low now because the world, and especially the U.S., has dramatically increased production. Demand globally is weak, and the Saudis have decided not to cut production. That's their official stance. Saudi Prince yesterday said that we'll never see $100 oil again. And then when the reporter pressed him a little bit, and he said, well, never's a long time. But that's the wild card in the whole thing. The Saudis seem to enjoy putting a little pressure on their friends from Russia and Iran, and especially in West Texas. They want to kill fracking, they want to kill shale production, and I think that'll take a price of somewhere around 20 or 25 bucks before they do that. And who blinks first is going to be a really good question on that. At current prices, we'll keep up production. We can produce at $25 a barrel. Once you have the hole in the ground, lift costs are not anywhere near 45 bucks. We can keep on producing like we have. It'll take a year or two of $30 or $40 prices before production in the United States start to decline very much.
Interesting. And you're right, of course, President Obama may in fact veto this decision. It appears that he would on the healthcare matter. So, but I would like to get still your opinion, Dr. Erickson and Dr. Martin, on this, because there are folks who say that there are some employers who are keeping people at 29 hours or less a week so as not to have to pay for health care. There are others who say no, it's just not a big effect. This is not a huge number of people. Dr. Erickson.
Well, I think the second group are probably more likely to be correct. There are a few institutions, I think NMSU's even done this a little bit, where they try to keep part-time employees below 30 hours in order to not have them be eligible for health care through their employer. I think that's a really I'm not sure how important an issue that is in making employment decisions, but in any case, the evidence indicates that part-time employment is declining. It's at about the national, it's about at the trend level, like Jim already has mentioned, and you just don't see the evidence that on a systematic basis we're seeing an increase in part-time unemployment. Going back to Jim's comment about the oil, I'm not saying that Jim's commentary is wrong. I would never say that about my colleague, but I do think that the market fundamentals are more important than the political activity that the Saudis are trying to stick it to the Iranians or the Russians, or, well, of course, if they're sticking it to the Texans, I could probably see why they'd want to do that. But I think that kind of political calculation is probably of second-order importance compared to the market fundamentals.
Okay, and Dr. Martin, your thoughts on, again, this healthcare question.
Well, I don't know that I have a whole lot to add to Dr. Peach and Dr. Erickson, my esteemed colleagues. I believe they know more about that than I, and I agree. This is probably one in a series of actions that the Republicans will take in Congress
to weaken the Affordable Care Act. So let me ask you another question then. You deal with the financial markets. The health care law has been a boon to health care companies. I mean, a big expansion for business, as opposed to the narrative we often hear in the commercial media about government takeover of healthcare. Just the opposite, of course. This is a lot of
well, as you have more people who are going to sign up for insurance, then the United Healths of the world are going to do very well, and they have done very well. Their stock prices doubled in the last year or two, and they will continue to do well as more people sign up for insurance.
So businesses in healthcare don't want to see the dismantling of the Affordable Care Act.
That's probably true.
Yeah.
And it will most likely engender more volatility in stock prices. Can I go into the oil price issue? It's a little bit unclear to me what the net effect is going to be. On the one hand, oil companies are going to be hurt by falling oil prices, but there are a whole bunch of companies that are going to benefit because their costs are lower. The transportation companies, like Jim mentioned before, airlines, trucking, railroads, chemical companies, manufacturers. And net, I think it's going to be a positive for the stock market overall. Although there may be areas of weakness, such as those energy companies.
Okay, and I guess you have a follow-up question.
Well, if you recall, the last time that we were here at this forum, the big issue was minimum wage. And so I'd like to know how you all foresee, and I know I have a couple of city councilors here, but I'd like to see your view. Where do we go in the future with this, and what is your prediction how it will impact our community?
So you're speaking about Las Cruces.
Las Cruces,
okay,
correct.
Okay, so we should point that out, that of course Las Cruces has a new minimum wage law which recently took effect. It's now $8.40 in the city of Las Cruces. The law was altered. It was originally going to take place over 3 years, going to 9/20 and 10/10. Now instead, that 10/10 will not occur until 2019, assuming no other changes are made. This is also, of course, a state issue. The state legislature may revisit the minimum wage. It's something that bills are already being talked about. One bill which deals with $8.30 for a state minimum wage. Another bill would make the state minimum wage $10.10. Unlikely to happen, to say the least. Dr. Peach, to begin with you, his question was about the Las Cruces minimum wage. Like cities and states, counties all over the country, local governments taking action because there has been no federal minimum wage increase. Your thoughts, his question about the impact of this?
You know, I think it'll have minimal impact in Las Cruces, and even if we did it nationally, it would have minimal impact. And let me explain why. Number one, a small portion of the labor force receives the minimum wage. Number two, even here in Las Cruces, where it's going to go to $8.40, the last time it increased federally to $7.25 in 2009, if you take that 2009 dollar and inflate it to 2015 dollars, you're right at $8.20. In real terms, that's not much of an increase in the minimum wage. It is probably not as much of an increase as other inputs into most business activities. So I don't, you know, there have been hundreds of studies on the effects of the minimum wage. All of them, not all of them, but the vast majority say it's just a wash.
Okay, Dr. Erickson.
Well, I agree that the studies indicate that it has approximately zero impact in terms of employment, what I would say though is we got to remember it does negatively impact small business people in the sense that they have a reduction in profitability, and now when I teach my MBA students, one of the things we teach them is to be flexible, to learn how to respond to the marketplace. And I have great confidence in small business people that they'll be able to adjust, and the impact on their businesses will be relatively modest for exactly the reasons that Jim said, which is that the adjusted for inflation increase compared to the last time it was increased is relatively modest. And also because there's been and just because entrepreneurs are entrepreneurs, they know how to respond to market conditions. But when we raise the minimum wage, we are saying that we want to benefit the worker, the low-paid worker, compared to the entrepreneur, the business owner. And I'm not saying that that's something we don't want to do because, but I am saying that's something we need to consider. There's an equity issue as well as an efficiency issue involved with the minimum wage.
And we have a person waiting to ask a question. Dr. Martin, quickly, your thoughts.
Well, I think it may have an impact on the margin. I have a friend who recently started a business, and I could imagine that as he sits down and does his budgeting for his establishment, and he needs to make a certain income in order to live and replace the salary he used to get in his old job, that he may say, well, there's one less person I'm going to hire to work here because of that. There may be.
So slight.
That could happen. So there may be a slight negative.
You're slightly more pessimistic.
But that's a very local. It's just business by business kind of level.
Depends.
And it aggregates up and probably washes out in the end.
Okay. We have another question now, and our partner is with us with a question. Bill Allen from the Chamber of Commerce. Hi, Bill.
Hey, Fred. How are you?
Good. How you doing?
Good.
Good.
Thanks again for all of you guys for hosting us again. I think it's great for everybody to get that information. And second, I'm glad I didn't have to ask the minimum wage question, so that's good. Professor Peach, you talked about the U.S. economy expanding, and it's expanding a little bit more rapidly than the New Mexico economy. Are there any particular industries that you're seeing in the U.S. economy that we don't have in New Mexico that we might be able to target? And then kind of a follow-up, if we were able to do something in right to work, would that help us possibly get some of those industries to come in?
Okay, first, I think we have oil and gas, and that's the energy sector has been a driving factor in the U.S. economy. It spurred capital investment, it spurred employment, it's had effects on housing markets in particular locations, And we share that with about a dozen other energy states. We have not done very well outside of oil and gas. There are a couple of bright spots, but we haven't done very well. If New Mexico wants to have successful economic growth, the number one thing that it has to do is to have a well-trained and highly educated workforce, and that's what I hear from industry groups, from business groups, from everyone. We have to have worker training, K through 12, higher ed, and vocational, that is at least as good as what we observe in the surrounding states. Without that, we haven't got a chance, and we're not moving in that direction. And a tight budget doesn't help us do that. The other thing, we can do some imaginative things here. Why not have every New Mexico high school graduate be truly bilingual in this international economy? That'd be a tremendous thing. Wouldn't cost us a whole lot of money. Why not invest? We're not in the 21st century economy unless we have broadband access, internet access, if you like, that is really first rate. And that's going to require some public investment. I'm sorry, it is the kind of public good that the private sector cannot undertake on its own and make a profit on it for many, many years. We're not doing the kinds of things that will make New Mexico grow. I don't understand why we don't. We have the resources to do it.
Okay, and we have another question.
Yes, good afternoon. I'm Dinah from Las Cruces. I'd like you to, all three of you, to look in your crystal balls about interest rates, not only things like investments, CDs, but also on the other side, mortgages. What do you see happening with interest?
Oh, good question. Is the Fed finally going to tighten things up as our economy starts to come back
quickly,
to life?
and then I'll turn it over
quickly,
to
if you could
Chris.
each quickly answer this question, where you think things are going.
The next move's got to be up. We're
Up.
we're
down.
at almost zero
We're at
right
zero.
now.
So
The
you
next
think it's
move's
gonna
going to
go
be up.
Slowly? Slowly?
Probably.
Slowly, okay.
Knowing the Fed,
Well,
slowly.
I do think the question is what's going to happen with short-term interest rates, and they have to go up. An issue that I think that's also important is what's going to happen to long-term interest rates, and they do not have to go up because they are already have risen to some extent. So mortgage rates are could go down or they could go up. I expect mortgage rates will go up. I expect other interest rates to go up, but I'm going to guess that the short-term interest rates will rise quicker than the long-range interest rates, and we call that a flattening of the term structure, and I'm going to guess that that's what we'll see over the next year.
Dr. Martin, the markets don't want to see this, but what do you think?
Well, like a lot of experts, I've been calling for higher interest rates for a couple of years now, and I haven't been right. Actually, if you look over the last 20 or more years.
Is it finally time?
Well, it is. Maybe.
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 I'm not sure yet.
I think the
Okay.
Fed. I actually think the Fed's in a box. I think they need to raise. They
need to do it.
They
You're just
will
not
raise
sure if they're
interest
going
rates
to
because
do
they
it.
put themselves out
Okay.
there
All right.
to do so.
And we have another question.
My name is Joe. I'm from Rochester, New York, and I spend the winters in Las Cruces. Now, the state is losing money apparently because we're not making as much money out of oil and gas, and you have a resource here that is incredible that we would love to have in New York, which is solar. So Professor Martin and you and the other professors, are there any companies capitalizing on that in New Mexico? Do we have any possibilities of using solar and even wind? You have a lot of wind out here too.
So, Dr. Martin, she called on you. We'll begin with you. Does New Mexico do enough to encourage solar energy, wind energy? This gets to really our last question about boosting the state's economy. Do we have enough in terms of incentives to make this happen and make this
Well, we
more
do have
vibrant?
abundant sunshine, and a couple of my neighbors in my neighborhood have put solar panels on their houses.
I'm seeing more of them out there.
Spurring me to think about that. If you listen to any radio in town, you'll hear commercials about credits and tax credits.
Should
and
the
so
state
on.
do more?
So should they do more? Well, I don't know. I mean, the more credits you give out, the less revenue the state gets, and the state needs revenue.
We only have a few minutes. Dr. Erickson, Dr. Peach, I'll make it quick if you could. Should the state do more? Can you answer yes or no?
Well, I'd say no.
No, the state shouldn't do more.
Yeah, I would say that you let the market do its thing.
Let
on
the
that sort of
market
thing.
do the thing. Dr. Peach, do you differ?
Yes.
You know he does.
You do.
Of course. And New Mexico does have a renewable portfolio standard for electricity production, as do 35 other states, that will require in New Mexico 20% of the retail sales of electricity to be generated by renewables by the year 2020. We could do a whole show on that. The reason I say no on just let the market work, utilities are big things. They are natural monopolies and they are regulated by the state almost everywhere. It is a public policy decision. Electricity markets have almost never been market driven.
Okay, very good, very interesting. All right, another question.
Cruz, again from Las Cruces. Are any of you aware individually or collectively of with respect to any discussions or any potential legislation on the state or federal level that would allow for interstate purchase of insurance? Because it would seem to me, or at least it's the case, that there are some that would believe, policymakers that would believe that it would, irrespective of what of whether healthcare costs will increase or not through Obamacare, that the ability for individuals, for companies to purchase insurance across states would lower the cost of healthcare.
So this is another policy question. Who wants to take that, if any of you? Is this a good idea?
Yes, it's a very good idea.
It's a good idea, okay.
It was widely discussed during when the Affordable Health Care Act was passed. I think it's a very good idea. It's complicated because states regulate insurance companies.
Okay. Wayne Hancock from the Doña Ana County Commission. Hello, Wayne.
Hi, how are you? Could you comment, please, about bringing the film industry to the southern part of New Mexico? We've hired a new film liaison in the city, and the county is preparing a film-friendly resolution, and I'd like to hear a little bit about the economic benefits of film.
So Wayne, a very good point, a good follow-up really to the solar question. We really don't let the market decide. We do choose winners and losers, and in the case of New Mexico, this is a huge subsidy from the state for the film industry. Dr. Erickson, does this make sense? I believe it's $50 million a year,
no,
right?
it doesn't make sense.
It doesn't make sense.
I do not understand why the state does this. Here I can point to my colleague Dr. Peach, who did perhaps the best study on this issue for the state a few years ago. But the state is spending funds to attract an industry which has very loose feet. It's an industry that is very promiscuous and will go to the highest bidder. By being the highest bidder, we in fact are shooting ourselves in the foot by spending way more on subsidies than we get back in terms of economic development. Those funds would be much better spent on K-12 education or reducing overall tax rates or almost anything else.
I hate to agree with my colleague, but I do.
Okay. Bill, you have another question.
Yeah, while we're on new industries, why don't we switch over to spaceport? And we know that the county is suggesting that the state take over the southern road and maybe swap out another road that's in the county that they'll take over. How do we take advantage of that industry when it finally comes online in a year or so?
Yeah.
Tough question in 2 minutes, but who wants to take it?
Well, I know that the governor is proposing including the spaceport in the state budget this year. I'm going to guess that that's the sort of thing that might fall out if we don't get better oil prices, but I hope it doesn't. Spaceport, we've had a huge investment made in the spaceport, and it's time to try to bring that to fruition. And I hope the state steps up to the plate on that. this is it's a problem industry because, as we know, we've had some setbacks in the last year of Virgin Galactic's problems and other problems, but if we can succeed with this, New Mexico has a lot of advantages that this could be an industry where we could have a real comparative advantage and could serve as a source of growth, particularly for southern part of the state.
All of that's true. 10 years or so ago, I served on the group. There were a dozen of us who put together the original business plan for the spaceport. I thought it had potential then. But what I'd like to say is that in New Mexico, we almost never ask the right questions about economic development projects. We ask whether or not this particular deal is a good one. We never ask whether or not this is the best $200 million we could spend on economic development. Part of the attraction of the spaceport was to attract tourists here. Would we have been better off spending $200 million on the state parks? We will never know, because we never ask that kind of question. We never ask the global question. I think that's what we need to do in New Mexico. It's just something we don't do here.
The spaceport is a good place to end our economic forum because in addition to tourism, it of course was designed to bring higher wage jobs. And we actually have some statistics that show how wage growth is such an important issue. You know, we talked about the fact that in December, average wages were actually slightly down. But taking a longer view, U.S. worker pay, 1979 to 2013, median wage workers only saw pay go up by 6%. Low wage workers pay go down by 5%. High wage workers saw pay go up by 41%. Some other statistics here. This hasn't always been this way. 1948 to 1973, these numbers, by the way, are from the Economic Policy Institute. U.S. productivity rose 96.7%. Hourly pay was up 91.3%. What happened in that other time frame, 73 to 2013? Take a look. U.S. productivity was up 74.4%. Hourly pay up 9.2%. Now, of course, productivity isn't just about labor, but again, look at those numbers. 9.2% for pay, 74.4% for productivity. The stock market continues to be on a roll, but the U.S. worker, not so much. I'm Fred Martino. Thank you so much for being with us. Have a great week.